Hello, everyone, and welcome to our presentation for the global consumer market and logistics. Our team number 4, Global Think Tank, will analyze the economic and financial environment of China, Japan, Hong Kong, and South Korea and discuss its implications for US firms. Economic environment, economy, potential economic risk including the per capita income, average household, and income in distribution. Urban and rural income graph. Despite this growth, the country faces significant income. In Q1 2024, urban residents' income was 15,887 RMB, nearly double the 7,003 RMB for rural residents. The major urban-rural income gap creates in markets and distribution challenges. This map shows the sub-regional disparities with coastal provinces leading growth. For US firms, the opportunity lies in growing middle class, but key risks include regulatory change, trade tensions, and rising complexity of market entry. Japan, mature and stable. GDP growth. Japan is developed economy with slow but steadily GDP growth expected around 1.3% in 2025. The average household enjoy a high standard of living, but wage growth is modest, concentrated by demographical challenges. Japan Inflation Index graph. Inflation is controlled with the purchasing power. Businesses benefit from a transparent regulatory environment but must address shift in composition due to an older population. Japan market demands. The aging population drives high demand for innovation in specific sectors. US firms have opportunity in healthcare, automation, and technologies focused on elder care industries. Moving to Hong Kong. Hong Kong GDP per capita. Hong Kong boasts very high GDP per capita around $50,000 USD built on a vibrant services economy. Its key strength is financial services, trade, logistics, serving as a gateway to Asia. Hong Kong economic growth graph. Economic growth was 3.1% year over year in Q2 2025. While the economy is highly vulnerable to global trade risk, tariffs, and geographical uncertainties. Financial hub. Income distribution is relatively equal but subject to financial market violently. Hong Kong is agilely making it crucial for firms' broader Asian strategies. South Korea expert powerhouse with consumer potentials. Our final markets for the economic environment in South Korea. Annual household income graph. South Korea has strong purchasing power with annual household income per capita near 19,200 USD. It income is highly export oriented market insensitive is global supply chains. Export in percentage of GDP and key exports. The economy relies heavily on exports with over 84% being manufacturing products. This focus on global trade in both strength and vulnerability. Recall retail sales show a slight dip indicate potential shifts in consumer behavior. Income distribution is improving with policies, middle class growth and higher domestic composition. Population percentage by income group. South Korea market opportunities. South Korea is global leader in technology and automotive sectors, offering significant opportunity for innovation, B2B and consumer brands. Summary table, key economic indicators. Here summary of the key economy takeaways. China has high growth but income inequality. Japan is stable but aging. Hong Kong is high GDP trade hub with political risks. South Korea is an expert leader focused on improving domestic consumptions. We now identify the financial aspects and their impact on US firms' marketing activities. The Chinese renminbi or RMB currently trades around 7.15 RMB per USD. China manage this currency use a floating exchange regime, a shift from its fixed peg per year to 2005. While stability aids financial planning, government intervention and shifting trade policy can cause volatility. US firms must closely monitor exchange controls and bilateral trade relations as they directly impact profitability. The Japanese yen or JPY is currently around 150 JPY per USD. It has experienced instability linked to government efforts to manage depreciation and maintain trade competitiveness. These fluctuations, influenced by economic policies and global events, can be significant. The yen's value must be monitored to manage its impact on import costs. Exchange rate volatility directly affects the pricing strategies for American exporters to Japan. Accurate budgeting is critical. The Hong Kong dollar or YHKD is unique due to its stable linked exchange rate system. It is pegged tightly to the USD, minimizing exchange rate volatility between 7.75 and 7.85 HKD per USD. The stability is a major benefit for US companies and reducing exchange rate risk for financial transaction pricing and investment decisions through geopolitical risks remain a factor. The South Korean won or KRW is currently about 1420 KRW per USD. The won has recently depreciated influenced by the strong USD dollars and its export dependency. The volatility impacts. This volatility impacts profitability, so US firms are advised to utilize currency hedging in contracts. MB requires managing capital controls. Japan's JPY demands monitoring import costs. Hong Kong's HKD offers crucial stability due to its peg, and South Korea's KRW requires currency hedging due to recent appreciation. Success in this region depends on proactively managing both the diverse economic environments and the inherent currency risks. So these are the references. Thank you very much.